Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Tendayi Kapfidze. He's the chief economist over at Nasdaq-listed LendingTree, and we're going to get his housing and economic projections for 2020. It's great to have you back with us, as always. And mortgage rates, do you think we could see an increase there?
Yeah, I think given that rates are now over 100 basis points lower than they were at this time last year, it's really hard for me to see them going much lower. I think the upside risk stems from if we do get real resolution on some of these trade questions, which, there is a phase one deal on the table. We haven't seen the text. But if that turns into a real thing, I think that reduces some of the worry about the economy and could see rates go higher.
And recent data on housing has been pretty strong, particularly in the month of December. Do you expect that to continue for 2020?
Yeah, housing was the strong point of the economy this year based on these much lower mortgage rates. And even if we see some increases next year, it will still be, pretty decent mortgage rates, good opportunity for refinancing, good opportunity to buy a house. So I think housing is still going to be growing faster than the overall economy in 2020.
Are you concerned about the lack of supply for entry-level homes?
Yeah, I think this is definitely a challenge. I think it's probably the biggest challenge in the housing market. There are a couple of things at play. There's not enough construction happening. A part of that is that builders don't find these lower cost homes as profitable, obviously, as higher cost homes. And we've also had a lot of investors come in to buy rental property, and they do most of that activity at the lower end of the housing market. So for entry-level buyers, for young millennial buyers, it's a real challenge. And, and one result of that is that home prices are going up much faster at the lower end than at the upper end, and that adds to affordability challenges, even with lower rates.
Due to the lack of supply
that's
out there. All right, moving along to GDP, consumer bright spot for 2019.
Yeah.
You think it might go down to about 2%, not negative, slowing but growing?
Yeah, I think we get a slightly slower economy next year. Even if we do get resolution on some of these trade questions, it's an election year, which tends to increase uncertainty in terms of business investment. So I think the business sector remains weak. Consumers should still benefit from a strong labor market, even though it's probably going to be slowing from this year. So I still think you get kind of an economy, I describe it as muddling along. Nothing nothing accelerating too much, but not a lot of downside risk given what the Fed has done this year.
All right, unemployment rate remains unchanged for 2020.
Yeah, the unemployment rate is really tough to nail down because there's so many people who are outside of the labor market. And as jobs continue to grow, some of these people enter into the labor market. But I think we still see a low unemployment rate with a 3 handle on it, probably around 3.4%.
All right, and to wrap up here, Fed funds rate, do you think we'll get any movement in 2020?
Well, the Fed says they're not going to move, but I will bring you back to this time last year. The Fed positioning was very different from what we ended up seeing in 2019. So I think certainly the Fed will react to events or react to data. And, really anything can happen, even though right now they're saying that they're going to be on hold. And, all expectations seem to suggest that that will be the case.
All right, Tendayi, great to see you as always. Thanks so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.